right, welcome to Your Time, Your Money, the show where your time is just as valuable as your money, and we know that. Very excited for another episode today. We have a great guest host today, Kevin O'Leary from Marvin and Company, and welcome.
Thank you.
Thank you for coming in today, and for those listeners who can't see us visually, this is not the Kevin O'Leary
I had my thing ready, man. I had my Shark Tank thing ready. I had a whole pitch lined up. Someone's going to bust through the door in a minute, and, you know.
But I am more impressed that this Kevin O'Leary is here than the other one.
Yeah, absolutely.
I've disappointed so many people.
Like, yeah, Shark Tank's coming to Your Time, Your Money. I can't wait.
Made it. No, just the guy from down the street.
We're out.
Well, you know, this episode I think is very valuable for a lot of our clients, especially in the business world. We're going to spend a lot of time today talking about, just tax laws and ramifications and things that business owners can do and individuals can do to help themselves during this, I would say probably your busiest time of the year starting now, right?
It's getting there, yeah. Yep.
Yeah,
we're ramp up for sure.
Right through April.
The fun begins January 25th.
It does. Well,
the first phone call comes in, probably the 24th around 3 o'clock. Hey, I just had a quick question, right?
It all depends on what you determine as fun, right? So everybody's definition is different, but it is that time of year, yeah. We're getting there.
Yeah, well, let's dive into it a little bit. Let's get started. It's your time.
Your money.
Why don't you do the honors?
The old sands of time here. We're gonna get them running. So
I guess first off, I guess an important thing is tell us a little bit about yourself, where you guys are located at.
Sure.
Kind of what got you into the wonderful world of accounting.
Yeah. Well, I'm a South Colony guy. Grew up, and I live now within a mile of where I grew up. I was playing college football in Central New York and came home for, winter break, started playing basketball in this adult league and met a guy who was a partner at the firm. And then another friend of mine, she knew another partner at the firm. And they, one of those days, were like, hey, why don't you come in and check it out? Went in. They were like, how about you come in next week and do an internship? I was like, okay. No resume, no references, no nothing, no interview. And that was 25 years ago this week.
Oh, wow.
So, yeah, we've been... Marvin would have been 100 years old this year. We just recently merged with MMB out of Rochester. So now we're about 30 partners, 200 employees. And it's a great story of just finding two cultures that work very well together, a lot of same goals, a lot of same youth, a lot of same excitement, and just kind of gearing up for the next couple of decades and generations of ownership here in the Albany market.
The merger just happened.
Yeah, it's effective 1/1. Yeah.
So it's the name changing?
We are now MMB.
Okay. Excellent.
And we're staking claim that one of the M's is Marvin, even though the old firm was Mengel Metzger Bar. And we're both in the BDO Alliance, so we've been working with them on joint projects for probably 20, 25 years. I've known a lot of their partners for a very long time. So in a lot of M&A, you're always thinking about culture, and that was one thing I never had to worry about because I've known these people so well for so long, so it kind of made it a no-brainer after a while. So yeah, but effective 1/1, just a couple weeks old now. So
great. So give our listeners a kind of understanding of the size of your firm, about how many CPAs are on staff, how many staff, how many.
I don't know if I have the stats yet, to tell you the truth. I know we've got
over
about
under.
Yeah, it's got to be. So if we're close to 200 employees, I would say we probably have to have.
Set the line at like 70.
Yeah, probably. I'll take the over on that one.
Yeah. Well, the reason I wanted to throw that out there, I think it's important that our listeners here, as well as our clients here, that when we network with quality individuals, especially in that CPA realm, it's very important that you build out your staff under you.
Oh yeah.
Because there's so many nuances and specialties in there, right?
Yeah, and I think too, our new partner group, like I said, it's about 30 of us, and I would say the average age of partners probably 45, 46, which is really great in this industry. And so I think a lot of our clients can feel comfortable that the person that they're working with or will be soon working with is going to be there for a long time, right? You can build those relationships, foster that good stuff.
Well, shoulder to shoulder is important. A lot of people get stressed out. They work with a new advisor, they work with an attorney, and a lot of gray hair. Or someone that's been in the business for 40 years and they're ready to retire. There's some concern there. Like, what's going to happen when you retire, and who am I going to be working with?
Yeah, same in our industry, and it's a lot of people that are retiring. They've worked with their advisor for 35 years, and their advisor is going to retire, and they don't know who they're going to work with.
And I give credit. Our firm has always been one that's kind of led by example. Our previous generation of owners have always been great at kind of teaching and mentoring. It was never like their own little practice within a practice, So we we just transitioned out 3 or 4 really senior experienced partners over the last 5 or 6 years with very little client, turnover or anything like that. So I think that only kind of proved the point that they did a really good job of making sure there was a number 2 on the job. There was a lot of good relationships there already, so you weren't kind of meeting somebody for the first time. So I think we've got a good formula for what has worked for us over the last 100 years, and we're just kind of sticking to it, even though there's the merge. For our Albany marketplace, it'll be very similar. Our clients really won't experience anything different other than
the name.
The business card will look different, the engagement letter will look different. It's going to be the same team. We just kind of have more stuff to offer now if it's needed. So
yeah, that's great. Let's delve into that a little bit as far as kind of services you guys work within. Obviously, the personal as well. I know you have that line. I think a good focus to start with is maybe that business side, because not a lot of people, especially if they're establishing a business for the first time, understand all the services that it's important that a CPA firm provides from valuation service or whatever that might be. What are maybe some of the areas that you focus on for small businesses, medium or large businesses that clients can take away as a win?
Yeah, I mean, a lot of what we do, honestly, is in those initial meetings is trying to figure out what they really need. I'm not really in the business of selling stuff they don't need. I mean, that just comes back to haunt you at the end, I think. So really what we try and do is make sure they have the right attorney, because I can't tell you how many times I hear someone, hey, I'm starting my business, and my friend who does real estate, he's going to set us up. I'm like, no. Like, the more you cheap out in the front of it all, it just costs so much more on the back end to fix. So we talk a lot about kind of lining up with the right professionals, and taking this serious. Like, this isn't a hobby anymore. This is real life stuff.
I was going to ask, like, when clients come into you, what's like the number one problem you see? What's like the number one issue you see, whether it be they misfiled or they don't put the right stuff in, or what's like the number one issue you see?
I would say usually it's just unfortunately they try to cut corners in a sense.
Okay.
And it's, hey, why are you a partnership? Oh, my next door neighbor is a partnership. Right. He has a partnership.
Why are you an LLC or an S Corp?
Why are you an S Corp? Why are you a C Corp? Oh, my dad had a company 40 years ago and he was a C Corp. It's like, no two situations are alike. They're kind of like fingerprints, right? And the worst thing I hear all the time is, my friend told me, or this guy who I know.
Oh man,
water cooler talk.
Dude, listen, I'll tell you what. So Matt Byers and I went and we did a little bit of a help at a plan that we picked up, and all I could do in the background is I could hear a person talking about financial stuff to other people. And I was like, oh my God, like, this person's giving financial advice. And I'm like, I wanted to be like, hey, where are you registered again? And who's your broker dealer? And who handles your E&O? You know what I mean? Yeah. Like, wanted to ask those questions, because at the end of the day, if you're giving legal advice or financial advice and you're not a registered person, it could be a real big problem if you put someone in a bad situation.
Yeah. And I think that's where, having been in the business now for 25 years, I have a lot of professionals in the area that I lean on for those expertise. So if we were dealing with a new company who's thinking about starting up, I have attorneys who specialize in that, who I work with all the time with. So we have a really good relationship, really good back and forth. We know how to ask the right questions. So getting everybody set up straight from day one is really important. And sometimes you can't get everything you want, right? Sometimes people want flexibility, but they want the protection of a C Corp. Or, so like, you can't have everything, and not everybody wants the same thing. So really those initial couple meetings of trying to figure out what that stuff looks like is really important. So, but yeah, I don't offer investment advice. I don't offer I stick in my lane.
The late acronym's always great, lawyers, attorneys, teachers, educators, right? So it's, at the end of the day, sometimes the gray area of what should I do next? I just got an inheritance. Where do I go? That's where the shoulder-to-shoulder relationship, in my mind, is, let's make sure you refer to someone that makes sense.
And for most business owners, it's that personal relationship that they rely on.
Yeah.
And it's also a relationship where it has to be spoken in common terms to the everyday American.
Oh yeah.
Right? If you start spouting form numbers and IRS code
and that form 2396.
I mean, the only one I think my clients are consistent with is like depreciation. They all know, like, Section 179, that's a term we use all the time. But other than that, I think the relationship side's huge, because especially coming off of COVID, and how much buying power was in the industry. I was having clients getting offers like you couldn't believe.
Sure.
And so a lot of these people, I don't think, had any desire to sell at the time. But when you rack up the dollars that were available, just what they went through COVID, and they want to talk to someone like, hey, should I do this? And you have to put yourself in their shoes. And I think that's where a good relationship comes into play, because they don't honestly, the money's so nice, they don't honestly care about the tax side.
Right.
They just want to make sure, like, hey, what am I going to do? You know, I've got this, I got that. I want to see the grandkids, or I want to see the kids more. And you just start talking more and more and more about that stuff. It's like, listen, you're selling for $200 million and you're 70 years old. You're in good shape, right? Like, the taxes are going to suck. I get it. But, like, you know, and everybody calls and says, well, Trump didn't pay anything. I'm like, all right, let's put that aside. Let's just
He's got real estate on 6
Yeah.
of the 7 continents
Let's
on the
just
planet.
focus on you. And, you know, like, and then you have those conversations, and at the end they're like, oh yeah, you know, but I'm still going to be able to see my grandpa. You know, it all comes back to those personal things that they're worried about. So, yeah, the taxes are important and they want to understand it, but at the end of the day, it's just talking more about what the next chapter of their life is going to be, honestly.
Well, I think that the natural conversation there is like getting into the nitty gritty with people. Like, sometimes they want to know things that when you say it to them, then it's like, oh man, I opened a box that I can't close now.
Yeah.
Right. Like, I start digging down this rabbit hole of, okay, well, what's this and what's that? And then 3 days later, you're getting an email like, hey, I did some research. And that's like, that's the most painful email. It's like, I got the research email. Like, okay, I'm glad that you researched it. I'm happy you spent 3 hours doing it. But 25 years of experience might have a little bit of a...
Yeah, and when you're on the 7th page of the Google search, usually that research is either old or not good, right? So, like, hey, all you gotta do is call, right? I mean, that's what we hear.
Just have a phone call.
Just have a phone call. Set up a meeting, whatever you want to do. But some of these decisions are enormous.
Yeah.
I mean, that's the thing where they come into play.
Well, and they're even ongoing. I mean, when you're starting a business, right, things that we see is that people sometimes mingle their personal stuff too much with the business.
Mm-hmm. Oh, yeah.
And they don't have that clear line between personal finance and and their business.
Yep.
And, you know, it shoots themselves in the foot twofold. You know, one is perhaps for Social Security, where they're writing everything off and they're not showing any income.
Yeah.
Right. And they don't realize, oh, well, my Social Security is going to be practically nothing.
Right.
Right. If they do retire.
Yeah.
Right. And then also they don't think about the valuation of their practice with their write-offs and depreciation when they go to sell it. Could you talk maybe a little bit about on that for a business owner of why they don't want to go so heavy on showing no income that they end up, you know, messing up the sale
their
of their business?
buyout,
And this is what we talk about a lot, like when I was saying you can't get everything you want, right? And I remember years ago having a conversation with someone who was selling the restaurant, and, you know, the buyer was looking for 3 to 5 years of returns, and he sent them over, and the first thing he said was, yeah, but you can't really go off those because
These aren't real.
No, this is what we're going off of. And I was representing the buyer, and I was like, listen, you've already had your cake. You kind of accelerated your sell amount by all these deductions, by all this cash flow that you freed up all these years by deducting your personal items through there. And we walked away because we couldn't get any comfort with the numbers. We didn't know what was which. And so from a deal perspective, I think it has a heavy burden. But yeah, when you're thinking longer term in the ramifications of self-employment tax or, you know, your Social Security and things like that, it can certainly have a bad, you know, a negative, it can certainly make a negative situation. The other one is like just, you know, trying to get a mortgage, trying to get a car, like all these things where you might have to show some personal financial statements or a tax return, and you're continuously writing all these things off that aren't really deductible on your business return. It's like, okay, which one do you want? Do you want to save taxes, or do you want to be able to sleep well at night, or do you want to do some of the other things? And most of my clients, we have really good conversations of like, hey, I want to kind of get up to the line, maybe stay a little short of the line, but I never want to cross over the line. Yeah. And we usually, you know, I've had a situation or two during my career when I'm taking on a new client and I look at their prior year work and you're like,
this isn't kosher.
No.
Let's time out.
I'm sorry.
Let's go back.
There's some things in here I just don't know what they are. So we're just going to pass on, you know, going forward. But a lot of it's just people's risk acceptance, you know, obviously. Yeah. So you definitely have some people that are out there like, hey, the IRS is totally underfunded. You're not going to have auditors.
Well, with 80,000 new agents, we might see a difference in that. You know?
No, and I think it's
87,000. They're trying to defund it, but I don't know if that's going to happen.
It's definitely needed. I mean, the amount of time we spend on hold these days to try and get things taken care of is really tough. But I wouldn't mind seeing a little more enforcement. I think it rewards the people who do it right, honestly, more than anything else. So. Yeah.
Well, let's get into that and what you do. Should there be an audit of a business or something like that? But we're going to take a break for 1 second and do our community spotlight for the day. So this is always an exciting time. So today's community spotlight is going to be Albany Broadcasting, and they're located at 6, the letter D. Johnson Road, Latham, New York, 518-786-6600. They have a lot of different radio stations in the area, South, Poughkeepsie, Kingston, Hudson, Albany markets, and they do a great job, with their packets for advertising as well. So if perhaps you are a business owner and you're looking at, kind of expanding to that next level, check them out. Get some radio airtime. I know podcast is great, but radio airtime goes a little bit further than that as well.
So sooner or later we're going to get live, but yeah, that'll be just as good as radio.
Yeah. So check them out, Albany Broadcasting, and that's PAMAL Ltd. Up in Latham there. So once again, great community spotlight. So with that being said, getting back to kind of the business structure and putting money away and not commingling all your assets.
Like, do a real world where you've seen a good situation and then you've seen a bad situation. I think that might be good for people to get some traction and understand. Yeah. So give me a real world, no names or anything like that, but yeah. Do a situation in comparison.
Years ago, I was kind of like the junior on a job. A client was just kind of getting up and running, probably $2 to $3 million in revenue, mortgaging his house, second mortgaging his house, taking all the risk that owners understand they have to do if they want to make those steps, right? He was ramping up, and we were working with him all along, trying to, we'd help him with his internal numbers, his QuickBooks. We'd help him with the bank the bank needed financial statements for the loans, all those types of things. And we worked with him until he sold for north of $130 million. And then it was like, okay, what's he going to do next? Because he's going to invest in things. He's going to give money to his kids. He's going to want to set up some major charitable donations. So you're trying to figure out how to work. That's like the best scenario, my favorite one of all, because I started when he tells the story about how I was eating Cheerios for dinner every night. Like my mother-in-law used to think I was an idiot. Like all these things, all these stories and you can see
the aha moment.
The aha moment, and like the passion in which these people talk about. It's like all that risk they took on. And then to have it work out, it's just, those are the moments you love. You love being a part of the ride. I loved every part of it. On the other side, it's, you honestly, you never get to you don't really ever get to a finish line because you never really know when that finish line is, right? It could be because they've run out of funding. It could be because the bank's called the loan. It could be for any different reasons. But the worst ones are when you really, unfortunately, some of the people didn't do the right due diligence or work up front with the attorneys on how to set things up so to protect certain things, whether it's IP, whether it's the owners, whether, those, and then just real quick, something goes wrong. And the minute something goes wrong, there's a legal battle. And usually the investors have a lot more funds available than the people that are kind of running the business in the startup world. And so you really hate to see those things. They don't happen a lot, but those are the ones that, man, it's a great idea. You got some young talent that are trying to get an idea off the ground, and it just never makes it to that business model. It just kind of dies in infancy. And those are the ones you hate to see because the amount of effort they put forth is tough. But mentioning Shark Tank earlier, those are the ones that, it works all the time and all these people get funded and you're like, no. It really is not the case. Yeah, it's really tough.
Well, there's a lot of business owners that are successful just because they're a hard worker.
Right.
Just because they're a hard worker and they make good income, but it doesn't mean that they're making wise financial decisions from a tax standpoint or from an investment standpoint.
Yep.
It's this old adage of like, hey, I could be the worst saver in the world, but if I work for the state and I have a pension, I'm fine.
Correct.
And if I didn't have the pension, I'd be
done. I'd be worried till I'm 90.
Up the creek without water.
And you guys see this all the time, I'm sure, but it all depends on what your definition of success is and what your lifestyle is like. I have people in my office who have worked with us for years and they want different things than I want. And some have kids and some don't. And it's like, you just, all these plans have to be different.
And all those can make you happy at the same time.
Right.
It doesn't matter whether it's money or no money.
Exactly right.
That's not what life's about. So, that's an important part.
I thought that was two very good narratives to kind of show. And there's a lot of people that fall all in between those two.
Oh, yeah, definitely.
It's good to know.
And the other ones too are, one of my other favorite examples is the family business that's transitioning to new ownership, right? Because, I'm usually dealing with a baby boomer kind of aged owner who is now transitioning to, someone in their 30s, early 40s, and those generations, as I'm sure we're all aware, they're just a little different, right? Yeah. Just a little different. And so it's really interesting to watch the mother and the father try to relinquish control of a company they've run for 35, 40 years, and they've made a lot of really great decisions, as they usually tell everybody.
Right.
But
they've never made a mistake.
Right. No, they certainly admit to it. But then their kids are now taking on that role, and it's funny because you have to kind of, you can't look at them as kids anymore, right? They're your controller, they're your CFO, they're the CEO now, and those types of things. And they've been brought up in these businesses, and they do very well. But helping them kind of learn how to, what a tax return is, why we do certain things, that's a lot of fun. And we've had, because we've been around for so long, we've had some serious multi-generational family work. And that's been fun to watch how the business changes from being a company that did this 30 years ago to being a company that does this now, and then new owners.
With a different dynamic, right? I mean, in some cases, there's a buyout. And now there's a
transition,
there's less cash flow because that buyout's going to that other generation, and
Right.
and in their mind, the company can still support it, but they don't realize that they didn't have that $300,000, $400,000, $500,000 payout from the company, and they're like, well, why are my kids making out better than I was? And I left them in a good. Well, they didn't have this massive payout going to you for your, for your retirement package.
Makes sense.
Yeah, and we do. There's a lot of ways that we work with clients on. Hey, do you want to? Is this something you want to gift to your kids? Is this something you want to kind of hybrid gift purchase, or you want them to buy you completely out? And some of that depends on how they got their ownership, because they say, hey, I was gifted by my parents, so I feel like it's only right to gift to them. But now the thought process seems to be a little different between these generations. Like, I worked for mine, so I want them to buy 20%, and I'll gift them 30%, that kind of deal. So there's definitely hybrids out there. But in all this, you kind of mentioned a little earlier, I think one of the things that a lot of companies don't do enough of is understand what their value is, truly understand what their value is. They have this idea that, I read somewhere that I'm 12 EBITDA, and but you're not in that industry, you're not of that size, and so that number means nothing to you. And so when you get into long-term planning and things like that, understanding what your business is worth, whether it's because you want to sell, or you might get the call one day that someone says, hey, I want to offer you $18 million for your business, and you think, well, it's worth 25.
Right.
But then if you had a professional come in, they might tell you it's actually worth 19 or 14.
Yeah.
And you should have taken that more serious, but now you sound like an idiot because you said I want 25. Right? So I think one of the things we try to work with some of our clients on is understanding value. So, as the state law changes seem to be on the horizon in a couple years, you might go from I don't have an issue to all of a sudden having an issue, especially here in New York. Right?
Yeah. Right now it's what, $5.5 million?
Yeah, $5.5 million. And I'm assuming the Fed will probably come back to 6.5, 7 after index of inflation.
Yeah.
But that's going to move the needle on a lot of people. So that valuation, developing that personal financial statement, understanding what you have under ownership, I think is really key.
Even though the royal family just moved 250 tax free. So I heard that article.
Well, it's the same too. A lot of people use trust for planning, but they're so tax inefficient.
Well, that's why you have to know when you do a trust. That's why you have to have a great advisor and a great attorney and a great CPA all monitoring it.
Yeah, I know. We run into times where there's a trust in the mix, but sometimes it's never funded. Nobody ever put money in. The attorney drafted it, like, all right, you got to trust. And 3-4 years go by. It's like, I got to trust. What's in it?
Right.
I had to put something in it.
My boat.
I didn't realize I had
my dog.
Right. And then it's the trusts are interesting because there's inherently usually a giving up of control in some regard.
Right.
And a lot of people who have worked hard to earn that money, to earn that lifestyle, the last thing they want to do is give up control, right?
Yeah.
And so usually it comes to this situation where you get everybody in the room, the family members, the lawyers, the accountants, and the advisors, and say, this is why we're doing what we're doing, because if we don't and things change at the end of 2025, here's the check you could be writing and something happens.
Right, yeah.
And so it's really, I'd say right now you got a couple more years to make these changes happen. But if you're a high net worth individual, it's something that you should certainly be working with advisors on to try and plan that out for.
And one thing I would recommend to our business clients especially is there's a benefit to going with your firm. And calling up Kevin and saying, hey,
absolutely,
I've been doing it XYZ ways for years, but you guys will go through their past returns, I would assume. I don't know how far back you'll go, but I mean, I'm sure you might be able to find things that need to be amended that might actually be discounts or depreciations and things that they didn't take that might get them money back that maybe their current CPA firm missed or just wasn't aware of maybe at that point.
Yeah, I mean, it really depends, honestly. Like a lot of times, I mean, because there are a lot of reputable firms here in the area. So, like if they come in from a firm that I have experience with and have relationships with, I don't usually look too hard into this. But it's like, I'll give you an example. I had one that they were using a family member to prepare the returns. And there was a unique part of the law that I just think they didn't understand in a sense. And talk about like a professional's dream. I start looking through the return, and it's pretty glaring that it's not there. And thank God it was a deduction versus like they forgot to put.
Oh, I forgot to put it in.
Income, right? So I'm going through, and I'm like, oh my God, I get to call this guy who's a friend of mine and be like, I got really good news. And I'll never forget, he was like, well, your definition of a good amount of money is a little different than my definition. And I was like, if this isn't a good amount of money, I don't know you as well as I thought I did. And it was a lot. I mean, it was probably close to $500,000 getting them back. Wow. And it was one of these things that I can completely understand how someone would interpret the law as written. And then, like everything, they came out with some revisions to it. So if you didn't follow it all the way through for the few months that these things take, I can understand how you would do it the way you did. So yeah, those things you're certainly looking. There's nothing like leading off, a relationship.
But hey, I'm going to make you $500,000. Yeah, you're in
interest, right? And you get paid interest, right? Those types of things. So, but yeah, certainly on the table for sure.
But the tax law is always changing. Obviously, things sunset too. So they put tax laws in and they sunset. And I think they're scheduled to sunset here at the end of 2024. What are some things that maybe business owners can take advantage of, individuals can take advantage of, maybe before that sunset, and good things that you see in the tax law now?
I would say one thing is that a lot of things that are changing on the business side, it's really important to understand that there's a lot of things that are happening that won't impact any of our clients. They're for clients that have more than $1 billion in revenue, or they're for publicly traded companies only. So when you're hearing all this news chatter and people are getting really fired up about it, you might want to make sure that it has.
Does it actually affect me?
Right. And I know there's a lot of mistrust in the political world right now, but like if you get into some really well laid out articles, you'll see pretty quickly like none of this stuff has anything to do with me. I think the one big thing that's changing right now is that, and again, especially on the real estate side, there's this idea of bonus depreciation where you can accelerate depreciation into the first year. 2023 is the first year where it's being reduced by 20%. So last year you could take 100% of the asset. This year it's 80%. Next year it's 60%, and it's phasing all the way down. I have a feeling they will fix this in some regard, but the political world right now kind of drives tax law change in a sense. So they can't even agree on what day it is. I'm really nervous.
Can't even get a Speaker of the House.
Right.
15 votes later.
15 times. They say 15th time's the charm. But yeah, I mean, there's a lot of... I get nervous sometimes as to how they're going to try and implement change and what they're going to do. Now, the good news is that they talk a lot about they're going to kind of put this income threshold in there that if you make less than 400, 450, they're not going to really, but let's not act like there's not fraud at all different levels of income, right? But leave that for a different day. I think right now the big one's the bonus depreciation one. I think the other one is, and try not to get too technical, there's certain limitations as to how much losses you can take. It used to be, hey, if I have business A and that has a loss of $800,000, I can use that to offset business B's profit. Now there's limitations as to what that is. And that I think just got recently extended to 12/31/28. They sunsetted it for the 2 years of COVID in a sense. They got rid of it, but it came back in. And that's one. And then there's another one out there in relation to interest deductions for businesses that are over 25 million in revenue. So this does pop up a little bit in our marketplace. The calculation and how you determine your limitation floor has changed. So it's going to impact more taxpayers that have income over 25 million. So those are the ones right now out there that are pretty major. I think the other one that's coming back in a little bit is they always talk about green energy. So, and on the real estate side, there's some, if you're doing a new building, there might be some benefits to doing some green energy improvements and things like that for credits.
Yeah, more efficiency for your business. Okay.
Those seem to always come with audits. Because I think there's a lot of
we
have
a windmill on the roof.
What are all those wheels in the back there? There's 800 hamsters.
They go really
big
fast.
hamster yard, and a bunch of mirrors for solar. Yeah, so
Where's Pete? I guess.
Someone's gonna get you, Peter or the IRS. But for the most part, those are the big ones I would say that are coming. So
okay. Well, I mean, it's important that our viewers know that they have a trusted resource in the CPA world, and you have a lot of resources at your disposal, which is great because at the end of the day, when we go out and see people, it's all about relationships, and it's all about, hey, this is a great attorney group, this is a great CPA group, and we've had some great run-ins, but we haven't had any longevity, and for the reason that. Here's my biggest thing. Always as a professional and as a human being, right? Somebody calls me, I'm picking up the phone. Yeah. I'm picking up the phone. Yeah. And I feel like more often than not nowadays, because of voicemails and emails, it's just like something personal. I can call somebody a week later. I go, hey, Matt, I called so-and-so, right? I never got a call back. Yeah. It's like, that kind of drives me nuts a little bit. Because if I'm going to tell somebody to call you, and then you just don't pick up or you blow them off because they don't make $1 gazillion a year, they're not important, So I got to be honest with you. I think your firm is going to do that, and I hope we get to refer people to you. I really do. So
yeah, it's been great. I mean, last year was tough for me personally because of all the stuff going on with the merge. I mean, trying to get all that out.
Balance is tough.
Yeah, and trying to be a good dad and all these other things. But now that the merge is done and we're kind of up and running, it's really exciting to have another 150 professionals around that can help you what you're trying to do. And like I said, we've got a great, enthusiastic young group that's kind of here for the future. Yeah. We're here for it. So.
That's great.
Cool. I'm excited. We ran it all the way up. Yeah. We haven't done that in a while, man. This is a good conversation.
Days of our lives, right?
I gotta flip it again.
Why don't you tell our listeners best contact information, where to find you at, email, phone, whatever.
So our and I'm still learning some of this. It's
take your card out.
I know. I might have to take my card
out.
mmbaccounting.com. My email is koleary@mmb-co.com, and my number is 518-785-0134. And my old email address still works, kpo@marvincpa.com. It'll redirect for probably about a year.
About a year and a month later. So I sent you an email, but you never got it.
I know. It's been, when we did all the transition, there was definitely some downtime that it didn't work, and we were like, and then they put the apostrophe in my last name as part of my. I was like, I'll never get an email if we leave that in there.
Better start using QR codes.
Yep. All right. So we're working on it, but yeah, we're definitely around. And I'll tell you one other thing we got going for us right now is we're starting an IT services platform, which is going to be rolling out later this year.
That's pretty cool.
Not managed service, more risk tolerance, vulnerability studies, all that. We've been doing it for a couple of years. We just haven't marketed it too much, but now we've got a team building right now, and I'll probably roll it out in this third or fourth quarter of this year, full gangbusters next year.
Oh, excellent.
So, with ours, we have
another bullet in the gun, man.
Yeah, that's right. And we got a big internal control group, and we do a lot of audits. So our IT group it's a nice move for them into what we're already doing. So that would be really exciting for us next year.
Excellent. Thanks so much for coming in today. And as always, you can find the Esley Group at 43 British American Boulevard in Latham, New York, 12110, or 800-222-3202. yourtimeyourmoney.net for your net worth. And as always, like, subscribe, and share. Thank you very much. Have a great day. Your time,
your money.